Well, it's that time again when we look back at our quarterly bingo cards and realize maybe embrace the chaos was a little too literal.
Oh, yes. If you listen to our first quarter kickoff episode, you know we flagged tariffs as a risk and they wasted no time sparking volatility. I guess when we said embrace the chaos, quote unquote, we had no idea the literal meaning it would hold, Jesse. But we also talked about watching for broadening earnings growth and falling treasury yields. And here we are again, right in the middle of earnings season, just like last time.
We look at the market quarterly, so we're going to look at our goals quarterly, our personal finance goals quarterly. So whether you're goal setting with us or just here for the macro tea, we got you. Let's start with what worked, what didn't work, and what we're taking with us into this new quarter. You're listening to Market MakeHer, the self-directed investing education podcast that breaks down how the stock market works in a way that makes it actually make sense from her perspective.
That's us. We're her. This podcast is teacher learner style. I'm Jess and Skip. I act as the teacher. I've worked in the self directed investing space for 15 years. It's going to be 16 in July. I need to quit just saying the time frame. And in stock markets on CNBC, Fox Business, Yahoo Finance, the Schwab Network, and Bloomberg.
And I'm Jessie Did Me. My job is to make sure that everything actually makes sense, which means I'm not afraid to ask the hard questions that we're all thinking.
And together, we're on a mission to make you fin-fluent, not fen-fluenced.
That's right. All right, Jess, what is on the agenda for today?
As it is quarterly planning season and earnings season, kicked off with the banks, which are doing really well. And Netflix reported today and also are doing really well. So we've got some strong earnings. So let's set some strong goals. We have three major things to cover today. One, we have a lot of new people, so probably explain our quarterly planning process, what that means. We gamified it with bingo and our own little spin we call S.M.I.L.E. Two, how our bingo cards went, what we accomplished, and what surprised us. I personally did not get bingo, but I also did it with a different method. So that's on me. Three, need to talk about what the markets did last quarter, the performance, what we're watching. So much to pay attention to. And of course, last, setting new intentions and writing our squares for the next 3 months.
Yeah, I am so curious what to even look at in this type of market anymore. Things have been definitely chaotic.
They have. We did say tariffs would cause volatility and to watch yields. So I was listening back to it, like, okay, good call.
Yeah.
But it's so hard to keep up with it. It requires the most amount of work. I was literally telling my boss that I'm extra tired lately and I couldn't figure out why. And then I had this epiphany. It made me realize that it's all this fiscal policy. It's tariffs, it's sparked volatility and inflation. And everything changes just so quickly. And with technology, retail reacts. You have to stay on top of it more. It's double the work.
Yeah, I have no idea how you're staying on top of all that at all.
Neither do I. I have no clue whatsoever. Lots of Celsius. Please sponsor us. Okay. So, to our new listeners, if you recall the 2025 vision boards and bingo cards that happened at the beginning of the year, we do that here. But we introduced it in a way that's more actionable. We kind of do the same thing, but quarterly with our own spin. Thank you, Jesse, holding it up. I love that. Instead of BINGO, bingo, we use SMILE. And yes, it is an acronym to guide you through your personal planning process.
And it's the start of the astrological new year. So Q1 was the start of the calendar new year, but Q2 is the start of the astrological new year. And as you're manifesting or them manifesting, however you want to say it, to all your heart's desires, it's a great time to check back in with those financial goals as we set at the beginning of Q1 January. So I'm going to go ahead and confess that I did not complete all my SMILE bingo squares because I thought we only had to do 5 to get like a bingo. But were we supposed to do all 25 or just what we could do? Okay.
Five in a row.
Okay. You're supposed to get them in a row. Mine definitely were not in a row. I did not get bingo. I was kind of a little all over the place.
I didn't get them in a row either. Yeah, mine too. I still say that's a win. Like, it's a win.
And I realized like I put some goals that were like too big to accomplish in a quarter. So now I'm seeing the way that could have been broken down. And like, I almost think we should do at the beginning of the year, like an annual one, and then look at our annual goals and see how we can break those down to
Ooh, I
accomplish
like that.
quarterly. Yeah, because it's like if my annual goal is to learn how to do something that like takes a while to learn, you're not going to learn it in a quarter. What's the first step, you know? So I think that might
Yeah.
help next time. Yeah.
I do confess I did mine during brunch and mine shifted a little after the seventh mimosa.
Totally fair.
Where I put grow my TikTok to 250,000. That was completely a yearly goal, but my brain was dysfunctioning.
I don't know. You're like well over 100,000, which is pretty good. So
But in 3 months I could
hey,
that's
you never know.
not realistic. Either way, we're agile here. It's quarterly goals. We want to think about them in a smart fashion. Here's how we do it. S.M.I.L.E. It's our fun take on a traditional bingo card, but instead of numbers, each column stands for something that helps you grow personally, financially, or professionally because we want to invest in you. The reason why we invest is for our best life. And so goals should be more than just investing, but we include it obviously because we're investing education podcast.
That's right.
So,
Disclosure.
yeah, that's true. So here's what the acronym stands for. S is skill up. This is learn something new. This could be bonds because we've been talking about that a lot lately, or maybe you're just getting started. So you want to start all the way from the beginning. M, monetize it. This is all about your career and your revenue. So you might be asking for a raise, trying to get a new job, a side hustle. I invest wisely. This is all about investing. So build that emergency fund, get 10K in a passive fund, choose your first stock or your ETF. Maybe you want to learn covered call writing. Like they all can be intertwined. L, level up relationships. This one could be your friends, your partner, the little people in your life. I try to level up my relationship with Cole's taller than me now, my child. He's
I'm like,
14.
what little people?
Yeah, he's not little, but
He's so tall.
he is so tall. It's really weird looking up to him.
Oh,
I know. He
growing
does it on
boy.
purpose too. I know. E, embrace the chaos. It's honestly a catch-all, but you could be on a solo date, things like that, because growth is chaotic and it happens when you're uncomfortable.
Mm,
Yeah.
yeah.
So each column of the bingo card is filled with goals tied to those categories, some serious, some fun, some that definitely made us say, well, that escalated quickly.
And yes, each column starts with one of those letters. So you fill out column 1 with challenges that help you skill up and so on. It's like a personal growth roadmap, but with your own financial or personal life goal prizes if you play your cards right. Spoiler alert, the chaos definitely embraced us first last quarter. So it doesn't have to be in order.
Yeah, I agree. All right, so we can talk about quickly what was on our last bingo card. Do you want to go first, Jesse?
I thought I was going to be able to accomplish a lot more than I did, but that's okay. I did get 5, so 5 is something.
I think 5 is great.
Yeah. Well, I can say that I did learn, like for Skill Up, I learned to use AI for SEO and content strategy, keyword research, like all my digital marketing
Oh, I love
type
that.
of stuff. Yeah, it's been a game changer. It's actually helped me a lot with my workflow. So
That's a
thanks,
win.
AI. I actually, for Invest Wisely, I was able to add some funds to my IRA for 2024 because I hadn't done that yet. Like the true procrastinator
Nice.
that I am. And I'm not saying I timed the market or anything like that. I'm just
I was about
saying
to say.
sometimes procrastination really pays off. And in this case, it definitely
Yeah,
did.
absolutely. Love that.
Yeah,
I'll call that a win.
that's a huge win. I was just like, look
Yeah.
at that. Something good out of the chaos. Level up relationships. I don't really want to get into my dating life, but I will say it's been wild and crazy
I
and
think
fun.
yours of knowing the details. I would say you leveled it up.
Oh,
Yeah,
man.
for sure.
Yeah. I've definitely learned how to spot red flags much quicker now, which
Oh,
is
that's a good
definitely a
one.
win. And to,
I like
say
that.
no.
Yeah. All right, my big one for me was a dentist appointment.
Oh, very important.
I did do that.
Yeah.
I wanted to grow my Instagram. I haven't been concentrating on that, and that was on my Monetize It. And I wanted to grow it to 10K. I hit 60K followers today. Like that was pretty
That,
amazing.
oh, on your Instagram. Wow. Yeah, that's good.
Yeah. So I was happy about that. I did not get bingo. I didn't get 5 in a row, but I got a lot, which I'm happy about. I did clean out my closet as well.
I was going to ask, did you get that closet cleaned out?
I did get it cleaned out. I did. And my niece also took some shoes. Good
Oh,
for her.
good.
Yeah.
Yeah, I got rid of some clothes and took some to like Buffalo Exchange and got some credit. And I didn't clean out
Love it.
everything, but that was one of mine too.
It's important to clean out your closet. I
Yeah.
always think of the Eminem song. I don't know why, because I'm a millennial. All right. Well, I'm glad we did this. It's good to gamify it. I thought it was really fun. Let's move on. You want to talk
Yeah.
about the market?
I will say last episode or the last quarterly financial episode, the first one, Q1,
Mhm.
um I talked about, oh, like looking at my budget every Sunday night with a face mask, and that did not happen. Like once a week is
Ooh.
way too much for me to like do budgeting, I realize. So I think we can take lessons from this. Like don't get discouraged if you don't do everything you thought you were going to do or get everything accomplished the way you kind of planned to or thought you would. Like we're humans and,
Yeah.
chaos
We did
is
not
chaos.
accomplish all of ours. Neither one of us got bingo.
No. I did 1, 2, 3, 4, 5. I did 6 things actually, but
I
yeah,
think that's great.
yeah.
Um, Mine was a little more sporadic. Well, did you count your freebie? You did 7.
Oh, 7. I got
There you go.
7.
So let's move on to the market update.
Okay.
Last quarter on the podcast, we asked a very big question. We said, would the surge in consumer spending, which many believed was fueled by post-election optimism because we removed uncertainty
Hmm.
because of the election, we didn't know what's going to happen. When you don't know what's going to happen, businesses and consumers can't prepare. But when you know an outcome, then you can prepare more. And the market hates uncertainty, right?
Right.
And the question we asked, did that big surge in consumer spending, higher retail sales, did that actually translate into stronger corporate earnings? And well, now we have some data. And the
Ah.
answer is it's complicated. We did have stronger earnings. We actually had retail sales today, which were also incredibly higher. It's very, very interesting.
I have a theory. I don't know. I think there is so much, like I've never seen so much content on social media around tariffs the last like 4 or 5 months than I have my entire life. And I think more people are learning about what tariffs actually are and how they impact us. And I did see brands taking advantage of that. I've seen a lot of ads on social media saying like, oh, tariffs are going to increase our prices. Get things now while they're on sale, or like everyone's shopping kind of to like get ahead of it.
Oh, I agree. I put that on my
Yeah.
story today. I think consumers are front running tariffs. Businesses we're front running tariffs too. That's in the data.
Yeah.
Absolutely.
Of course it is. It's never a straight line with the market.
Yes, I think you're right though. So we did see encouraging data. Earnings weren't bad, and economic reports, they weren't bad either, but something else happened. We had a shift in sentiment. So uncertainty was removed. Economic data said that we're doing okay because of the tariffs, because of the inflation expectations, because of earnings expectations, all this soft data. There was more uncertainty that was added that overcame that data. So investors started to anticipate too much and too fast, like to your point with what happened with tariffs, and that made the market vulnerable. And at the same time, soft data, things like CEO surveys and consumer confidence, they started falling to levels that we haven't seen since the pandemic. And that matters because when confidence starts slipping, spending and hiring tends to follow.
Mm-hmm. And we did talk about the soft data and hard data a little bit ago. But yeah, even though the numbers were solid, people, I guess, just started getting nervous, right?
Yeah, like you're right. Soft data, the feels, and then
Yeah.
hard data, the reals.
Mm.
And tariffs didn't help. The potential return of tariffs created market volatility. And that added another layer of uncertainty. Investors pulled back, and that caution translated into falling stock valuations.
So what does that mean heading into Q2?
It means we're entering this quarter with a lot of skepticism, more than what we've had to start the year. And here's just the bullet points of what's shaping the market mood or vibe. First, investors are pricing stocks more conservatively due to concerns about slower growth, tariffs, and unclear policy direction. So analysts adjust expectations. Those expectations are conservative because you don't know the impact of the data.
Mm.
Second, company size really matters. So last year, as in 2024, the Magnificent Seven, big tech names like Nvidia, Apple, Meta, and Microsoft, they carried the market a lot. This year, they're dragging it down. So the sector that leads the rally is the sector that's leading the decline.
Hmm.
That group, it's down about 15% year to date, while the rest of the S&P 500, and this is as of the first quarter, right? So as of March 31st, the rest of the S&P 500 is down around just 1%. It just tells you how big tech can move. And my thoughts with that is its velocity of downturns, meaning we have a lot of retail participation. When the market goes down as much as it does, people are leveraged. They have margin calls. They have to meet those margin calls. And the way that they meet those margin calls is normally with the top heavy securities, which is the Magnificent Seven, because everyone had a lot of that. So it kind of pushes it down a lot further.
Okay, just to clarify that a little bit. The Mag
Sure.
7, the like top performers of the S&P 500, the top 7 companies are down 15% year to date, while the rest, like the other 497 or 93
Three.
companies
Yeah.
are only down 1%. And isn't that what we talked about in the market breadth episode?
Yeah. We were looking for market breadth, and that's actually a healthy sign. It's a healthy sign because
Because
we
you
want
want
to
everyone participating in the group project, not just the top.
Yes,
Yeah.
exactly. So even though it's the market's down altogether, certain stocks can carry the market up and they can carry it down. And we're seeing that now. And as we get into earnings season, now is it time for a recovery? There are lots of thoughts around that.
Hmm.
Third, leadership rotated. Smaller companies actually held up better. 7 out of the 11 sectors posted gains in Q1 even
Hmm.
though the overall S&P 500 was down. That tells us that the sell-off, it's concentrated in last year's winners. It's not evenly distributed. It's a sell-off of the highest performing. And that is as of March 31st is when this data is. I wanted to make sure that when we do these quarterlies, we literally look at the quarter as a whole,
Okay.
even though it is April 17th today and this will be released April 18th.
Okay, but we're looking at Q1 of 2025 when we talk about this data. Okay.
Yep, exactly.
Well, it sounds like the market is trying to find new leadership.
Yeah, exactly. So what we have to ask ourselves, the money goes somewhere. So if there's a broad sell off, is it going into cash, cash equivalents, which are treasuries? Is it going overseas? And that's actually what happened. The international stocks were part of that story. They outperformed US stocks in Q1.
Hmm.
They delivered one of their best quarters and outperformance since 2000 and a lot of capital is starting to flow overseas. And I wonder if it's because of interest rates, because the ECB and other central banks are cutting rates. We're not. If you're cutting rates, you
Oh,
stimulate growth. It looks like investors are they're either diversifying more
yeah.
internationally or they're positioning for more growth internationally, but it also makes sense because they are lowering rates where we are not.
Yeah, that's interesting. And we did talk about Warren Buffett's letter to shareholders and how he was diversifying into Japan companies.
Yeah,
So I wonder if people are
exactly.
following suit or just kind of looking out. But that brings up the bond market.
Yeah.
So I know we always say to check what the bond market is doing, and it performed a little differently this time, didn't it?
Yeah, the bond market actually supported diversification in Q1 as well. Treasury yields fell. The 10-year dropped from about 4.8 to 4.15. Again,
Hmm.
as of March 31st, it's about 4.38 today,
Okay.
which means prices rise because they work inversely. Yields go down, prices go up.
If you don't understand that concept, Jess has so many great videos on her TikTok and Instagram explaining it all to where you will definitely get it.
Oh,
So
thank
go
you.
check that
We have a
out.
whole episode dedicated to
We
it
do.
as well.
Yes.
Um, but that shift was driven by the same concerns. I call that, and market participants call that, a flight to safety. So you go to a flight to safety. Where is the money going? If it's going to treasuries, that's a flight to safety over the same concerns: slower growth, tariff fears, and uncertainty. Another theme, this will be a bingo card item for me to create an episode on
Hmm.
because we haven't talked about this. So we're going to go another layer deep into the credit
Mm-hmm.
market is wider credit spreads. That's just the difference between what risky companies, so corporations, pay to borrow versus what the US government pays. So the difference between treasuries versus corporate debt.
Mm.
When those spreads widen, so the difference of those two, they're not closer together. That means investors are getting more cautious. They're demanding higher compensation for risk. It's the episode we're going to make is a recession is called in hindsight, but there will be signs, and that's one of them.
That people wait, the sign is that people are investing less in corporate bonds and more into like government bonds.
Well, flight to safety is a piece of it, but what we would look at is spreads widening. So you might hear
The
that on
spread.
finance media all the time. Oh, corporate spreads are fine, spreads are tight. That's the risk kind of gauge
Interesting.
of corporations versus treasuries.
And I guess so that all ties into like the Mag 7 going down and bringing down the S&P. Like, is that all interconnected?
I mean, everything is interconnected. If
Yeah.
you're selling out of the Mag 7, where is the money going? It looks like it's going into treasuries. It was going overseas. It went to gold. Those are flights to safety, but it's also looking at growth elsewhere. And that's concerns domestically, is what it seems like.
And it's flights to safety because it's safer on the risk scale of investments.
Correct.
Yeah.
Exactly.
Okay.
Exactly.
If you don't know your risk tolerance, check out our risk pyramid episode. Okay.
Boom.
So to recap, Q1 started off hopeful, but caution took over. Big tech stumbled, smaller companies outperformed, bonds rallied, and tariffs stirred the pot. And now here we are, earnings season again.
Exactly. And once again, the banks are kicking things off, as they always do.
Yeah, I remember you saying that the last quarterly episode. I did not realize banks kicked off earnings season. So we're seeing banks earnings first.
Yes. And they already did. They tell us a lot. And I like that banks are first because they tell us two things. One, back into credit. They tell us consumer balance sheets because big, huge banks know how consumers' health are, their balance sheets, because that's where it is, as in like where are they spending money in their bank accounts? And they also know what income cohort they are. So their commentary is really important. And what I found very interesting on Bank of America commentary, they said that they're positioning reserves for 6% unemployment, which is good. Like bad reserves is part of what created the 2008 great financial crisis.
Oh, right.
So they're learning from that. So if we want to think about recessions and what that means, and so if banks are telling us they're positioning, have a very big cushion, that's a good thing. And then they also tell us consumers are still spending, that's also a good thing. So it's that's what I like to listen to for banks. It gives you a pulse on the consumer because we have this disparity between soft data and hard data.
Yeah.
The only time we're going to get any clarification is from them.
And we're just looking at U.S. banks or other countries as well?
This is U.S. banks. So when we say earnings, we are talking about the S&P 500. That's what we concentrate on a lot. Yes. But yeah, they tell us how companies are navigating this cautious environment and whether the optimism of Q1 has staying power or if it was just a moment.
Yeah.
Yeah.
All right. Well, then what are you watching now?
So I'm calling it a ceiling of uncertainty. So this is what we're going to revisit when we go into Q3. There's a ceiling of uncertainty that's been placed on the market ever since we started talking about tariffs. We came to the conclusion that the Fed needs to be in an easing policy. That's what we said on our deep dive on tariffs. When was that? Oh my goodness. It was last year.
End of last year, yeah.
Yeah. So the key theme was when tariffs come in, there will be volatility. We revisited what happened. It was a 18.5% drawdown. They didn't ease, but they can't because they need an all clear. So they will not do that. The easing means lowering interest rates. They're not going to do that without clarity. We need certainty in regard to tariffs, and that could come with some sort of deal. And I think there will be a deal. There will be a deal of some sort. We just don't know when. But when we don't know what that deal is or what tariffs actually look like, businesses and consumers can't prepare. They can't make decisions. And the longer this takes, the more damage it's going to have on our economy. Because businesses are front-running tariffs. Consumers are front-running tariffs. It has damage, even if it's just the thought of it, if it's suspended because the economy is still moving, even though they're agile and adjusting. So I'm watching for a deal with the EU or China. That's going to give the Fed clarity to cut, in my personal opinion. So,
Hmm.
not financial advice, all the disclosures.
You're saying in your personal opinion that
Yes.
if there is a deal made on tariffs with China and the EU, like this comes with some sort of resolution, that might allow the Fed to cut rates again?
Yeah, because they'll have clarity on the impacts of tariffs on the market. They
Mm.
don't know that right now because we don't know the extent of it. And when they have that clarity, because right now they're competing with their dual mandate, which is price stability, inflation, and maximum employment.
Hmm.
And the two are kind of at this weird spot because of tariff policy. So we need clarity. Once we have clarity, that will give them a reason to cut. That will remove the uncertainty ceiling. I don't think the market can go any higher until we remove the uncertainty ceiling.
Yeah, and that little bit of back and forth definitely didn't help things. So
No, yeah.
that's
Well,
like not usual, I guess, you know?
and that's why Trump keeps saying to Powell aggressively that he needs to cut rates and threatening his job over it because if he cuts rates, it softens the blow of tariffs.
Mm.
But there's a reason why Powell wears a purple tie and is non-political.
Yeah,
Did you notice that he wears a purple tie every
I did
day?
not, but that's good because I think historically he might have been a Republican. I don't know which way he leans, but and he was obviously appointed by Trump, but I do like that he stays very like
Very, very.
nonpartisan, bipartisan in his decisions and like takes his job very seriously, which is great in a Fed chairman.
Yeah, it's so important. So I think that we need that uncertainty ceiling removed
Hmm.
because this earnings season, if it's not removed, we're going to get uncertain forward looking guidance. I think we're positioned to where we'll beat earnings. People are hedged. It's not as bullish of a sentiment, which means you're set up for more of a rally, to be honest. We're going to beat earnings. We always do. That'll lead to bear market rallies, but we
Mm.
need a deal and we need clarity to shift those bear market rallies into something more, unless it's a super, super beat.
When you say a bear market rally, people are rallying because it's a bear market, like because prices went down 20% in the S&P 500. That's a rally? Like, how is that a rally?
Yeah. So we're in a bear market. If we go down 20%, which happened, the market doesn't go up in a straight and it also doesn't go down straight. There's ups and downs. So a bear market rally, you might get like a 1 to 5% move. You just don't overcome the previous highs. We don't move back into rally super like does the rally have legs or is this just a bear trap? That's what it's
Oh,
called, a bear trap.
I've never heard that before. That's cool.
Yeah. We do a whole episode on that actually, now that we're in a bear
Yeah,
market.
because you talk about like higher highs and lower lows a lot when you're charting. So you're
Yeah.
saying like we're not going to rally back to that higher high point we were at before it dropped that
I don't think we
quickly.
will. That's a
Okay.
ceiling of uncertainty. As in, like, literally think of a flat line and we need that ceiling removed.
Oh, okay.
Mm-hmm.
Okay.
That's it.
Ceiling of uncertainty. That makes sense now.
Yeah.
Cool. I guess we can talk about our new quarter goals. Like, what's a new quarter, new goals, right? Or maybe
Yes.
the goals that we didn't finish or get to last quarter. We might want to shift some things, reimagine some things, break some bigger goals down a little bit further if they were unattainable.
Absolutely. I think the market outlook is so good to discuss on this episode. I thought about maybe we should separate this, but then I realized this episode is beginner with the planning aspect, but everyone should do that. But it's advanced at the same time. And it's on purpose because if we just went through a market update of what literally just happened this last quarter, where we think the market's going to go next quarter. So if you heard a term or a concept that you don't understand, write it down.
True. Put it on your bingo card. And we will give
Hmm.
you like a downloadable link if you didn't get it last time and you want to print it out or write it in or whatever, however you want to do it. I mean, I literally just drew
Yes.
mine out because I don't have a printer. So,
Mine was
and I like to
drawn
have a
too.
physical thing to like check off, like with my pen in my
Super fun.
face. I did get lost for a few weeks, but I found it and it's back. So
So that's all
maybe
that
have
matters.
both. I don't know. Anyway,
Yeah.
um, I guess let's maybe each pick one letter from the S.M.I.L.E, starting with S, skill up. What are you going to do?
Oh, yeah. So I want to learn more about our email marketing software. We just switched. If you haven't noticed that, or probably have noticed that our newsletter doesn't go out as often, I want to send it out more consistently. So Jesse and I are switching over software. So that would be my skill up is to watch more YouTube videos on that.
Nice. I put learn how to play cello, and I did acquire a cello last quarter, so that was cool. Thanks,
Yeah.
Zoe. And now I need to just kind of break it down into like watching YouTube videos and then scheduling a lesson with somebody and, actually like taking the smaller steps. Like I'm obviously not going to learn cello in a quarter, but I can take the smaller steps to getting there. So getting a cello was one of the steps. And yeah,
Yeah,
yeah.
that's important. These are SMART goals. Saying I'm going to learn email marketing software, that's not enough. I'm going to say I'm going to watch a YouTube video on it. That's enough
Yeah.
because it's more actionable that way. And then we can, small steps. What's next?
Monetize it. What do we got?
I would like to grow my social media more, brand deals and things. That's new for
Mm.
me. I've concentrated it this year.
Oh, yeah, you're doing it. You're totally doing it. I think I'm going to really focus on monetizing the Market Maker YouTube channel. If you haven't subscribed, we broke 1,000 subscribers there. I'm gonna
Yay!
get that going a little bit more. I gotta do more of those shorts, which, I guess it's just like all the other social media platforms, but people seem to like those. So we need to do more of those, and make sure I'm posting all of our podcast episodes
Yes, it's
consistently.
so difficult to keep up with. I'm not gonna
It
lie.
is all the things.
Invest wisely. I actually really want to make a budget spreadsheet, and I have a really great spreadsheet that's for my taxes and expenses, but I have this budget one in mind that I really want to do. Must do my taxes quarterly now, as in write down my expenses. That is the goal because of
Um,
what Jesse and I went through.
yeah, I'm gonna copy that one because it was such a headache. And like
Yeah.
quarterly taxes and budgeting, I love it. Send me your budget spreadsheet. Maybe we
I
can make
will.
one for everyone.
Yes.
Okay. I also need to roll over an old IRA from a previous like small agency job because they changed from my brokerage firm to somewhere else and I don't want it to just sit over there. So I'm going to roll that over into a new brokerage because I want to take advantage of tools and features that my other one does not currently have.
I'm going to put it on mine, help Jesse roll over because
Yes.
you can get a sign on bonus. We need to do that. My day job, I work with a brokerage firm, so we'll go through how to pick one. We'll do it live on the episode. That'd be
Yeah,
super
we'll
fun.
document it and share it with everybody.
Yes, I think that's great. L, level up relationships. So I put on mine, and I'm so sad about this. Mine was do a whole Lego set with Cole, but we went and bought one, but he's really outgrown it and prefers different things.
Oh,
So I'm gonna have him choose an activity. That's what it's gonna
that's a
be.
good idea.
What about you?
I really want to plan a visit with my family.
Mm-hmm.
It's important.
E, embrace the chaos. So for me, this would be accepting the chaos and taking some me time. I'm gonna
Mm.
add meditate at least once a week in the morning. I think it will do wonders for me.
If you need an app recommendation or any recommendations, let me know because I meditate a lot. I didn't meditate. I don't know where I'd be right now.
Mm.
Not doing this. Yeah, that's a good one. And I need to make time for my creative writing projects. Like I have a lot of writings and poetry, half done or started that I want to actually, keep working on.
I like it.
Hmm.
That's great. So remember, your bingo or smile card, it doesn't have to be perfect. It just has to keep you moving, pick goals that are fun, stretch you a little, and keep you grounded. I'm happy with what we accomplished.
And if you want to use our free S.M.I.L.E bingo card template, it is linked in the show notes. Fill it out, tag us, and let us know how you're embracing the quarter ahead.
Yes, quarterly planning, it can be fun. And a little tip for you when you do this, I learned this from my friend Maddie Mills, who you should absolutely follow on social media. She is
Mm.
a Yahoo Finance anchor. I actually anchored a whole show with her, and I'm going to do another one at the end of the
Ooh.
month. Super excited. She really breaks down the markets really well. Love her social media channel. But I love this tip she shared. When you're doing something, you make it fun and you trick your mind. So when we're filling out these bingo cards, get yourself that latte. get your favorite little drink, give yourself a little treat and start planning because you're like, this is exciting. You make it fun.
Ooh, yeah. I shall make an elixir. What do they say? Like, make it a ritual, turn the mundane into magic type of stuff. Make it fun, whimsical.
We also have some amazing reviews to share from our listeners.
I love this part.
Oh, yeah. So from ZJ Guitar, 5 stars, fantastic. Start from the beginning.
We get that a lot, start from the beginning. So feel free to start from the beginning. That's where my journey started.
Yeah.
Episode 1.
And we made a playlist for that. So ZJ Guitar says, it's incredible to find a podcast that goes in a truly linear format, breaking down the financial jargon and dense parlance that gets in the way of normal folks using these important investing tools and institutions only on episode 6. And I can't wait to get caught up. Thank you. When you make it here, CJ.
Yes.
Thanks,
CJ. And number 1, Oh Girl says, I understand. 5 stars. Mind blown emoji. Star-eyed emoji. Thank you so much for your time and efforts. After listening to a few of your recent podcasts, I really understand the market better. I also feel calmer about investing. Oh, that's great. A little information made a huge difference in my feeling confident to jump in. I heard you on Tyler Gardner's podcast. Thumbs up. That's cool.
Yes. Tyler is amazing too. I shared a lot of my story on there. So he has a great podcast. We'll add that to the show notes. It's called Your Money Guide on the Side. Yeah, so thank you for the kind words.
The episode that you're on. Yeah. Yes. And if you would like Jess to wake me up in the middle of the night or very early in the morning, vampire time, with your reviews, feel free to leave one too.
Yes, I get excited. I say, Jessie, look.
Definitely does.
And we're in different time zones. So normally, since Jessie stays up to 3 a.m. her time, 6 a.m. her time, and then I get up at like right when she's going to bed.
Yeah. Literally vampire hours.
Yes. And of course, share this podcast with a friend or whomever. It's what helps us grow.
And remember, when you build knowledge,
you break down barriers.
Remember, investing involves risk. There is always potential to lose money when investing in securities. MakeHer provides educational content and resources for informational purposes only. We are not registered financial advisors and do not provide personalized investment advice. Any information provided by MakeHer on our website or podcast is not intended to be a substitute for professional financial advice. MakeHer is not liable for any investment decisions made based on our content.